Hello everyone, I made that big call on AusBiz yesterday morning that we could have well seen the major top in US stocks and equities. Overnight we saw the market continue to head south, then it closed on its highs but about the same close as the previous day for the SP 500. And again in Asia today we're seeing a bit of sinking in price action for US equities. There's an awful lot of data coming out in the US tonight. But the market is probably going to have a lot of volatility tonight in New York. I don't rule out the possibility of a very sharp, spectacular up move as a relief out of some of these economic data series that people are fearful of at the moment. So you might see some kind of punchy relief rally, a little bit of meme trading on the day by the day traders in New York, punching it higher. But I think again after that, and I've spoken about this before, this kind of price action behavior, a couple of hours up there and then being sold down again. It is quite clear that some big funds now have an interest to offload stocks, some of their holdings, and we're seeing a lot more of that kind of frothy forecasting going on. People saying all sorts of big numbers like 500,000 Bitcoin and the stock market through the roof, and Warren Buffett's wrong to be cautious, and all this sort of thing is typical of a major market high. So I'm sticking with my AusBiz forecast from yesterday morning, which was to call it live that we'd just seen the major high in US stocks in the last 3 hours. Notwithstanding the fact we could see a sharp rally today, depending on how that economic data runs, particularly the inflation number. So watch out for that. So Australian stocks, everyone wanted to buy yesterday because of the Woodside deal, but really that's running out of steam now. I think we can see rollover. We're going to continue to see high volatility in the Australian stock market, but it is overall underperforming and will continue to be weak. It could be the US market plays a bit of a leapfrog with the Australian market to the downside from now on after tonight's data. We saw yesterday some factory activity index data in the US, but it was only a small bounce and it wasn't a very good indicator anyway. It was a private sort of small survey sample indication. For currencies, Euro, the Australian dollar, we've been aggressively bearish. It's been the right thing to be. It's been a lot of downside in those currencies. US dollar very strong, but they might have run their course. But I still think you need to maintain a core short Euro, short Australian dollar position. Gold, if you caught some of my social media updates on Saturday and Monday morning, I was saying the week ahead for gold would be a weak week, and that's certainly what we've seen. And I think moving forward, gold is now in fresh buying territory again. And remember, my advice for the last 4 months, 5 months has been steady, small, steady accumulation of gold, and I think that's still the way to play it. Clifford Bennett, Chief Economist, ACY Securities. Watch out for further Australian dollar weakness, Australian stock market weakness. Watch out for US dollar strength. Watch out for a very volatile night in US equities. But if there is a dominant risk, I think it is still to the downside. Thank you very much for listening in, and see you on the next episode.